Have you been neglecting candlestick pattern in your forex journey? In this video, I will tell you why candlestick pattern is very important as a forex trader. If you are new to our channel, click on the subscription button so that you get notified whenever we drop educational videos like this. Now, what is candlestick? Candlestick is a type of price chart used in trading. Not only forex traders use candlestick, crypto traders also use candlestick. People that trade stock also use candlestick. You see why candlestick is very important in charts and in trading. That shows how price moves during a specific time period. Now, let's say you're a 1 minute time frame trader, you're a 1 hour time frame trader, you're a 1 day time frame trader. 1 minute is telling you what the candle has done in a minute, and 1 hour candle is telling you what this particular candle has done in an hour. That means one candle is selling for 1 hour, and 1 day is still telling you for the whole of the day, this is what this candle has been doing. So be you an SMC trader, be you a support and resistance trader, even price action traders, candlestick matters a lot. But a lot of traders neglect candlestick pattern in the chart, which they see that our candlestick doesn't matter. But no, in this video, you will understand why candlestick plays the important and perfect role in the life of a trader. Now, in candlestick, we have 4 types of candlestick. What happened in candlestick? How does this candle operate in the market? Each candle operates different way. Each candle operates different way. That shows you that something is happening in your chart. Now, we have 4 key points that candlestick operates on. We have the opening price, we have the low price, we have the closing price, and we have the higher price. These 4 key points is very important in your chart. That tells you how the market has been reacting and what these candles has been doing in different time frame or different hours. Now let's dive into that. All right, this is a candlestick, and you see that this is a bullish candlestick and this is a bearish candlestick. Now you see the closing of this candle and you see the opening of this candle. This candle opened here and closed here. This is the high of the candle and this is the low of the candle, telling you that this high is where the market got to before sellers pushed it to this point and closed it. This is where this thing is showing you. And the body of a candlestick tells you who is in control of the market. Now we are having a big body telling you that buyers are in control of this market. You see why candlestick matters a lot. Now let's say, for example, you want to take a trade, and looking at the body of the candlestick, you are seeing a very big bearish or bullish candle. You are going to know that if I'm seeing a big bullish candle, this body is telling you that buyers are still in control of this market. And this tiny thing you are seeing here is what we call wick or shadow. So this is telling you that, okay, sellers tried to push this market to this point, but buyers did not accept. So the market closed at this point, still telling you that buyers are in control of the market. So candlestick tells you who is in control of the market, and this is the bearish candlestick, and this is vice versa. You see the opening of the market, you see the close of the market. This is the highest point that the market got to, and this is the lowest point that the market got to before buyers closed it at this point. And this is the wick. You can call it shadow. A lot of people call it shadow, a lot of people call it wick, depending on what you call your own. And this is the body of the candle, telling you who is in control of the market. The body of a candle tells you who is in control of the market. If you see a rejection candle, It will tell you that, okay, there's an indecision, buyers and sellers are struggling in that market. So that's why candlestick pattern matters a lot. Candlestick helps you to know who is in control of the market. So when analyzing on your strategy, try to identify some candlestick bodies to tell you or give you a full confidence of that market you want to buy or that market you want to sell, who is in control of the market, and how to place your trade. So let's continue, guys. Now we have part of the candlestick. Like I told you, that candlestick comprises of four things. We have the opening price, we have the closing price, we have the high, and we have the low. And we have part of the candlestick. That is, we have the body. The body tells you who is in control, which you have a bigger body telling you, if it's a bearish body, it's telling you that what? Buyers are in control. If it's a bullish body, telling you that what? Sellers are in control. Now we say if the close is higher than the opening, it's bullish. Usually bullish candle is either green or white, depending on the color you want to label your candlestick. If the close is lower than the opening, is bearish, depending on the color. Some people label bearish as green, as red or black. Now, like the wick I explained to you, wick or shadow, the thin line above and below the body is the wick, which is the line I showed you. That thin line, we call it wick or shadow. Now we have the top wick and we have the bottom wick. The higher price it went is the top wick, and the lower price it went is the bottom wick. And we have what we'll talk about, what? Why candlestick is important. Why is candlestick important? When we start, I told you that a lot of traders neglect candlestick, but candlestick is very important in the life of every trader. Now, candlestick tells you a story of buyers and sellers in the market. Candlestick is the only thing that will make you know who is in control of the market. When you see some candlestick patterns, it will tell you either buyers or sellers are in control of this. That's why they say candlestick tells you a story of buyers and sellers in the market. And we have what we call the long body. Long body is telling you what? Strong momentum. Like I explained to you at the beginning of the video, that if you are a person that trade with smart money concept, which is SMC, you need candlestick as a what? A full confirmation. There's some candlestick pattern you will see on maybe your 4 hours or your 1 hour time frame. It will give you a full confidence to do what? Take that trade. Because the body of the candlestick tells you exactly who is in control of the market. If you see a smaller body, it's called indecision, which I explained to you. Buyers and sellers are dragging on that market. There is no accurate sellers, there is no accurate buyer, they are just dragging. Talk about the long wick. Long wick tells you rejection or reversal. Rejection means this market has rejected, and reversal means this market is about to change direction. On our next video, I'll be giving you 5 powerful candlestick patterns that will make you and help you remain profitable in the market. We call them reversal candlestick pattern. When you see this candlestick pattern either at the resistance or support area, demand or supply area, is telling you that the market is about to reverse. Candlesticks helps you what? Know who is in control of the market. As a trader, don't joke with candlestick pattern. Don't joke with candlestick formation. It will help your trading journey a lot. See you guys on our next video. Comment and share. Follow for more.